Hi, Clint. I'd like to welcome you this morning. For our audience, I'd like to introduce, for those who haven't seen or met Clint before, Clint Abraham, who's a portfolio specialist at Morningstar Investment Management. As many of you will realise, Morningstar Investment Management is a key partner to Future Gen Solutions, and we've been working with them for quite a number of years now. Before I go any further, I just need to issue the general advice warning. Everything we talk about here today is essentially general advice. Major themes, major questions. Please do not act on any of this advice. If we need you to act on anything, essentially we will give you advice in its normal format. So don't act on anything. Any questions though, please come back to us separately. But without any further ado, I'm going to basically introduce Clint, and probably the first question I'd be interested to know from your perspective, Clint, is what's causing you guys to lose sleep, if you are, at night?
Hi, Murray. Good morning, everyone. To be honest, we're actually not really losing sleep at all. And we certainly don't want our clients to lose sleep around how they're investing either. So as you know, when we invest, we do so with a margin of safety in mind. We're really concerned from a risk point of view about the risk of losing money that we can never make back. So when we have that framework, that's a very robust framework for us to be able to analyse markets. And there's certainly no shortage of things going on, and perhaps we'll talk about some of those more topical events. But what I would say is that we're able to navigate these challenging markets. And I say challenging because they're starting to get a little bit expensive. So if there's something that we're very mindful of at the moment, it is what is starting to be priced into some of the more popular share and bond markets. And why that's important right at the moment is we've seen share markets have an extraordinary rally from the lows that we saw in the COVID sell-off. 2021 to date has been a very strong period, even in view of the weakness that we saw in September. And what normally happens when you have an economic recovery is that people, share market investors, they tend to bid up the current price of shares in anticipation of future earnings that are going to come through as a result of the recovery. Now, that's absolutely happened in this situation, but what we can see is the extent, the magnitude of people being prepared to pay more right now for what might come in the future means that if those earnings don't actually get delivered for some reason, then there's the real chance that we can see some significant loss in certain markets. So that's something that we're mindful of. But as I said, I wouldn't say that we're necessarily up at night stressed, but it's definitely something we're keeping our eye on.
So do you think those future earnings have been priced to perfection?
That's kind of the point. There's very little room for error should something come along that impacts further future corporate profitability. Now, that could be something like COVID. It could be oil related. We've obviously seen the oil price rally very strongly. There's concerns around Chinese regulatory change, perhaps a few other things going on in the world. So any of these things, and indeed something we're not even talking about at the moment, has the potential to impact the future profitability of companies. And the point being, the current share prices, particularly in the US, there's not really much margin for error should one of those events come along.
Yeah. And you mentioned about oil stocks and energy stocks in particular, and you were very bullish on that 12 months ago. Where does Morningstar see those opportunities?
Yeah, interestingly, where we see opportunities now is exactly the same place that we saw them following the COVID sell-off in February and March 2020. So what I mean by that is that when that sell-off happened, it was those economically sensitive sectors that really felt the brunt of poor investor sentiment. They were so unloved. So we've talked about energy already. The other one that's worth noting is the financial sector. So financials is primarily banks, but it also includes insurers and asset managers. And that particular index fell significantly because banks tend to do well when the economic outlook is positive, and of course it wasn't very positive at that time. Now, as we've moved through last year and into this year, as the economic outlook has improved, sentiment towards those banks has improved as well, and they've done quite well. And of course, our portfolio has quite an allocation to both energy and financials. But interestingly, we still think there's more to run in those positions. They still look the best of the sectors when we conduct our analysis. Granted, they're not as good as they were because we have had this very strong period in markets, but it's still the key focus for our portfolios because there's still value to be unlocked.
Yeah, and I believe also previously you saw value in the UK market. Is that still the case?
It definitely is. So the UK market it kind of lagged other key markets for a couple of reasons. Obviously, they were dealing with Brexit, which was just very poor for sentiment generally for UK assets, and they were one of the first countries to be quite affected by COVID. And again, you might remember some of those photos and images when they first come out. But the other thing is, when you look at the UK market, there's actually a lot of these value sectors in there. So they have some of the biggest energy companies on that market. Some of the biggest banks are on that market as well. And again, they were quite unloved throughout that COVID sell-off. Now, more recently, again, they're rallying back because of those reasons that we're talking about, but we still think there's more to go in the UK market. It still appeals, and the companies that are on that market, we think are very high quality businesses. It's a real who's who of global business if you look at the top 10 or 20 companies on that exchange. And again, for us, they really appeal.
Thanks, Clint. Once again, Clint, we appreciate your time this morning, and obviously if people have any particular questions or comments, they can come back through me to you. Mm-hmm. So thank you for taking the time, and we'll speak soon.
Thanks for having me.
Bye now.
Bye.